Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, October the 16th, 2024. I am going to start. Let me see if there you go. Move that box. That is where I was going to start. I'm going to start here on the S&P. Again, today we were looking for follow through to see exactly where and what has completed at our recent lows. And here in the S&P, it does seem pretty good. Let me go out one chart higher so that I can pull it open from here. So I want to show the entire, there's the minor 3, here is the minor 4. And what we're working on is a minor 5th wave up. I continue to find that it is very likely forming a diagonal, in which case waves 1 through 5 will all form 3-wave cycles or 3-wave sequences instead of a 5 3 5 3 5 3 5 3 5. They're all threes. So here's 1, here is 2, here is 3, here is 2, here is A of 3, B of 3, C of 3, and there's the third. So it's A, B, C, A, B, C, a little bit different. And this is likely here, A, B, C, or we're going to do it A, B, C. All kinds of strange things going on, but it's 3 waves, and it's 3 waves, and it's 3 waves. So we're in the fourth. We still run fibs, but it's going to come down in an ABC. But we have 3A2 to 50%. That's the retracement. That's what we're looking for. And so that's 5740 to 5684. Well, we're still pretty much holding above 5800. So let me take it back down to that hourly chart. Let's take a look inside this and see what is it looking like. So there's the end of the 3. We're looking for an ABC, and that's our initial target, down to 5740. So I can 1, 2, 1, 2, 3, 4, 5. Put an A there if I had to, or look for 1, 2, 1, 2, 3, 4, 5, 3, 4, maybe. That could actually be, if I did it on, let me show you a little trick that I use. See how that low? That low? That was a tail. This is the real low. So when you come back and you see you have 1, 2, 3, 4, 5. And I can take it back out, put it back on that bar, and I got the same thing. Or you can put it back on a candlestick, and you got the same thing. 1, 2, 3, 4, 5. Or 4, and then a 5. And that low, that close of the bar was lower than this. So I put it there. And that is wave A. Now we're in a B wave up. You would run, if you're just looking for the retracements for where this B wave up may do, you're going to have to run it from there because that's where I'm putting the end of it. And what we have, 2, 3, 6, 3, 8, 2, 5, it's a B wave. It can go between 50 and 62%, and it has already. You can see it. And started to come back down. It should form its own ABC. And right now I can tell you this looks like a 1, 2, 3, 4, 5. Small on the hourly, but still 5. And then we're doing intervening 3. And we might get up here or even a little bit higher. We should not threaten 59.18. This should not be a flat unless, of course, unless I mark it back. I can't, though. I have to put it down to 3 and then the 4 and the 5. So either way, I think we either come down a little bit more and then rally back up, finish off this B wave, come back down in a C wave, right? A, B, C, and end up somewhere closer to here, somewhere closer. Our first level of support is right in here, previous 4th. I mean, even, and yeah, I'm going to have to use it. It is a previous fourth, not necessarily a fourth wave coming down, but it's a previous fourth. I mean, it is a fourth wave, but I'm looking for it either it can come into here. I'm looking for minute 4. I'm looking for it to be an ABC. And then there's my first line, still above 5,800. So the market could remain above 5,800. Go give it a little challenge to 59, maybe tomorrow, maybe overnight. Come back down, get as close as we can to here. Or we go full bore. We come down to that support, which is 382, which is at 57.40. And then we rally again in 3. And that's going to be to finish minute wave 5 of minor wave 5. So again, these are resistance levels for the B wave. And I think the B wave is going to be an A, B, C. That's what it kind of looks like to me. If it's all over because we got to 618, then we just start coming down in the C wave. And then we have that. And if I had to, I would take that away. And now I put on, I'm going to check to see what the C wave should look like. And in that case, I use extensions. Right to there, back to there, because that's where I'm calling the end of that A wave. And now I put it up to here to the top, and here you have it. There's 100%, where wave C would equal wave A. 58.27. Where is this low? 58.11. That's 100%. Fits to a T. And then guess what? We rally again. So maybe we come all the way down into here. 1.618 also. Most common, 100%. Second, 1.618. Third, 618. 618 just gets us basically back to that 58.50 level. Okay, so those are the levels. First, second, third, most common. But it has to be 5 and it has to be clean. So let's pay attention tomorrow. And so we should have the down cycle. We need to complete this 4, and it may take a little bit longer. Tomorrow's Thursday, it may take us into Friday. Now that we did have the VIX expiration today, and many times the release from that, the release of volatility, the release of the gamma and everything else that happened as those options expired should open for a little bit more of a correction. We got a continuation of the correction today, but then we spent a majority of the day just kind of scooping it and buying it, scooping it and buying it back. And so now I think that we should have that a little bit of a correction in the form of a C wave and get us all the way back down into here, maybe a little bit lower, maybe down to that low, which is 58.10, 58.11. Those remain important. All right, let's go over moving averages. Let me move out to the daily. We'll just take a peek what they look like. They're still, look at that. They're kind of unaffected by that strong downturn that we had on Monday. And you can see today's was almost nothing. So I'm like, yeah, it's a sliver. That's actually the restart of Globex. So we basically had a fairly okay day. All right, let's go over to the NASDAQ. All right, in the NASDAQ, starting here, let me go back down. I want to start in that hourly because I want to stick to the inside. NASDAQ more pronounced. So we have a little bit more of a challenge. But again, let me just open it up a little bit more so we can see this entire form there. The 3, there's the 4. We've already surpassed it. So this part of the correction, it becomes a little bit interesting because do I go A, B, C instead of using it as the 4? And I think it would be A, B, C, well, ABC1, ABC2, ABC3, ABC4, ABC5. So this has full range to come down. That 4 Yeah, I'm going to keep it in place because it actually was that 3 belongs over there, to tell you the truth. Let me just move it. I don't want to make myself crazy. And there's the 4. Okay, so we're coming off. There's our markers. 382 at 50% for the minute fourth wave, right? Color, minute degree. I probably should put a key that just kind of follows every time I change a chart, the key comes with it. That would be interesting. I'll ask. So these are minute degree. We're looking at minute 4. Then we come back down to the 1 hour and just 20 days and open it up a little bit. And let's look inside. So I basically can do an A, B, and then 1, 2, 3, 4, 5. And this almost A, B. I'm putting in a C wave for a B wave. Maybe. How weird, but could. Let me look at one thing here. I'm just showing you. And we're going to run extensions. Not extensions, just retracements, excuse me. But I want to dump all of these because I want to look at an irregular in terms of a B wave as a part of this fourth wave. Okay, where did they go? Above. I goofed that up. I went the wrong direction. And then never mind. If it's a little bit of an irregular as to what I'm trying to put in there, and then we'll go from here. No, dang it. Please excuse me. It's been a long day. I've done a lot of talking, and so I start to mumble around a little bit. I apologize. It's not being done on purpose. But I guess every time I think I'm prepared, I got something I seem to have forgotten. There, 1.236, 1.382 that it could come down to. So I still can consider it an irregular. A, B, right? Because it is 3 down. And then we're doing a C wave back up. Now, what do I use for that C wave back up? I am going to be going down from here to here. No, dang it. I apologize. I make a bunch of lines there down to there. So you see, we can come back up to 20,440, 20,584. All in the shape of a C wave coming up and then go back down yet again. So I'm going to remove those. Let me remove these. And the way that I would count this at the moment, otherwise I go quickly as I did in the other, and I go down to the line chart, and you can see 1, 2, 3, 4, 5. So this would be the A. So gave you both choices. If you're just trading and you wanted to go do something, well, that's what happened. Bring back over to the candlesticks. Candle trend. Candle. Thank you. So I'm going to go 1, 2, 3, 4, 5, A, B, C. Now we can put in just some extensions. No, damn it. Well, I apologize. I'm not going to go restart all this because it would make me crazy, but I'm using retracements. And upside, what do we got? 50 to 62%, 20,443 to 20,499, basically back to 20,500. That would be a B wave. So that's where we're going to look. And then we come back down in a C wave. I'm going to take all this off because I'm being told it can be confusing. So we're looking for B wave up. I just showed you how I measure for that. You do the length of the A wave and you do retracements. And the most common are 50 to 62% right in here. We've already come up almost to the 382. So that might be A, B, and we come back up. And then we'll be done with that. And we go back. We finish off. Here's our zones down in here. Let me take this off. And we can look at what I would have for the C wave. I'm going to come down to here. And back up to, let's use 450. We have 618, there's 100%, 19,977. And it could be really quick. And it could be tomorrow or Friday. And then we start all over again on Monday and get deeper into earnings. Because again, what it would be a minute fourth wave. Here's our Fibonacci targets for the minute degree. Here are our Fibonacci targets for the minuet degree coming down. Those are all minuet. Gotta change my labeling. All right. So that's kind of what I'm also thinking here. That we finish the A wave, we get up, finish the B wave, so both the ES and, come on now, the ES and the S&P need to finish their internal B waves, B of 4, come down in a C of 4, finish that, then we mark it as a minute wave 4, and we start to rally. And that's going to start taking us to what I hope will be the concluding part of that minor fifth wave. Keep your fingers crossed. Let me go out to the daily. We'll take a look at the NASDAQ. See, minor fifth wave coming up. And actually, that is my goal still. I'm hoping that the market gets above 21,213. Here's 21,243. 100% for the third, which is done. So I got to take that off, but I'm leaving it on kind of as a resistance zone. But I in all fairness, it needs to come off. Wave 3 is done. So once 4 is, I'll run it over and we'll get a number. And hopefully we can clear that. I don't care if it's by 10, 20, 30, 40 points or even more. Because right now the market's having trouble looking at the brighter side. They kind of see it and then they don't. And I don't know if we are doing our getting out of tech now, year-end stuff now, which is really early, or just it's a play for expiration. Is it a play for whatever? But we're seeing a lot of activity in chips still. And do we put the trade on? Are we taking the trade off? Whatever they're doing. It's still happening. All right, that's going to be it. Next update will be on Thursday, October the 17th.